Hi everyone, my name is Brandon Hamilton and I'll be going through this week's presentation and article regarding trading strategies using options. So why would one use trading strategies involving options? It's a great way to hedge a portfolio, gain exposure to anticipated price movement, and the specific strategy is going to depend on the trader's beliefs regarding an asset's price in the future and the amount of risk they're willing to take. Examples of these strategies include a strategy involving holding an option and a zero coupon bond. This could be a principal protected note. We also have strategies involving holding an option and the asset. This could be a covered call and a protected put. And then we also have strategies involving two or more options. Examples include bull call spread, bear put spread, a box spread, butterfly spread, and a straddle. This week's article, zeroing in on an options trading strategy, 0DTE, is by FINRA, which explores trading options with 0 days to expiration, 0DTE, which they say has become more common as expirations in some options have expanded to have more frequency. With 0DTEs, the position is established on an option contract's expiration day, which could be tied to an index, ETF, or individual stock. FINRA indicates that opening 0DTE contract positions among institutions and investors increased 60% between January 2022 and 2023, with retail specifically up 75% during that time. There are several benefits to 0DTE contracts. They provide the opportunity to capitalize on positions quickly and limit the time that money is tied up in a position. And they also tend to have lower premiums. However, there are risks. Since there is such a short time to expiration, they are very sensitive to changes in the price of the underlying asset. The brokerage may liquidate the position if you don't have the required funds or shares of the underlying asset to meet your obligation upon exercise of an in-the-money option. There are several implications for traders, including the potential for quick profits. These contracts carry lower premium, so lower setup costs, have an overall higher risk. The increased trading activity in 0DTE contracts means that there's ample liquidity for traders, and because you're trading it on the expiration day, there's going to be a limited time for adjustment in your position. So here I have an example of implementing a straddle strategy using 0DTE contracts. So let's say a trader is looking at a stock that's currently trading at $50 and they expect a significant price move by the end of the day due to upcoming news, but they're not sure whether the price will go up or down. So to capitalize on this, the trader sets up a straddle utilizing 0DTE options. So they would have to buy a 0DTE call with a strike price of 50 for a premium of $2. The trader also buys a 0DTE put with a strike price of 50 for a premium of $2. Total cost entering is going to be $4. Regarding payoff, if the stock price ends the day at $50, both options will expire worthless. If the stock price ends the day above $50, the call is in the money and the put option expires worthless. And in this example here, I have the stock price ending at $55, meaning the trader's profit would be $1. And if the stock price ends the day below $50, the put option is in the money and the call option expires worthless. And in my example, hypothetically, the stock ends the day at $45, so the trader's profit would be $1. In conclusion, options can be incorporated into trading strategies to hedge a portfolio against market movements or take advantage of those movements. Some strategies involve holding an option in a zero coupon bond, holding an option in the underlying asset, and holding two or more options. This week's article, zeroing in on an options trading strategy, 0DTE, explores the rise in trading of 0 days to expiration option contracts. And 0DTE option contracts tend to have cheaper setup costs, allow for quick profits, but tend to come with higher risk. And here is the link for the article, which I will also include in the discussion post. Thank you.